Hello and welcome back to The Note. Ben Bernanke is history. His 8 years as chairman of the Federal Reserve are now over, and the debate over his very controversial rule, particularly his policy of quantitative easing or money printing, can begin. At the moment, that controversy is greatest concerning the emerging markets. Did the Fed's easy money policy stoke bubbles and now turmoil in emerging markets? With me now to discuss this fascinating debate is the Chief Executive of Hermes Investment Management here in London, Saka Nusseibeh. Saka, thank you very much
Thank you for having me.
Joining me. Let's start by taking a look merely at the performance of key asset prices during the 8 Bernanke years. It turns out that it was, that house prices didn't do so well over his term. Just in the last few months, stocks have started to outperform long bonds. How do you think history is going to rate the very controversial things that Bernanke did during his tenure?
I would argue that, in fact, this chart is exactly the right sort of chart you'd see. He had an issue, obviously, with the crash of '08. We had a bubble that needed to be burst, and he had to do two things. He had to make sure that the system survives, and that's why he pumped a lot of money in and put in QE. Remember, he studied the 30s recession and therefore came primed for this. But the other side of actually pumping a lot of money in the system is to allow real asset prices to be destroyed. And he did that with the Case-Shiller index, which is the prices of properties. So right across the United States, not just in the states of Florida, but right across the states, you had real asset price destruction, you had more than 400 banks going to the wall, and then you had the rebuild. So from a theoretical point of view, that's exactly right.
Okay, and the contrast, particularly with here in the UK, is a little alarming then.
That's absolutely right. And with Europe, it's even more, where you've had, in the UK, some quantitative easing, but we haven't had the same sort of destruction of asset value, or indeed of financial value in financial institutions. Different, because we have a concentrated banking sector, they have a much more diverse banking sector, and therefore the rebuild is harder to get than what he did. But I'd say on that level, actually he's done the right thing.
Right. Now, the Fed doesn't act in a vacuum. Let's move on to the emerging markets, which is obviously the great topic of the moment. This I find fascinating. What we're looking at here is the price to book multiples on the MSCI Emerging Markets Index and the World Index, which is basically MSCI's Developed Markets Index. And you can see that for a large amount of the time during the Bernanke era, emerging markets actually sold at a premium. And at the moment, they're at the steepest discount in about a decade. Has that been driven by excesses in the fund management industry? Has it been driven by money coming out of the Fed? What can explain what we're seeing here?
I think there are two things happening. The first one is, it is clear that the easing that's happening in the United States has partly found its way in emerging markets. We know, for example, that there is a kind of credit bubble happening in China through the back door because of the easing in the United States. However, that does not explain this amazing premium and the shift from discount to premium. If you go back to the 19th century, English fund managers were investing in Brazil, Russia, India and China.
Without the aid of acronyms.
Without the aid of acronyms.
Right.
And they continue to do so. When I started in the city in the 80s, we invested in emerging markets for the reasons that people know about. It's got high population growth, productivity growth, and therefore high economic growth and the creation of middle class. However, and this is an important however, I was told that we always had them at a discount to developed markets because there is political risk. And political risk means that property rights, it means the structure of the markets can change and it can flip overnight. How quickly can it flip? Look at Egypt, was in the news recently. It goes from a presidential democracy to essentially a military dictatorship in 6 months. That sort of change is possible in emerging markets. Remember Latin America in the 70s?
Yes.
That's how it happened. Therefore, they deserve a discount. The fact that they got a premium, to my mind, is about marketing, not about fundamentals.
So the ridiculous line of acronyms that we've seen over the years, the fact that there was such a thing as a BRIC fund.
And a new paradigm. There are no new paradigms. I've told you this before. Fund management has been around for a long time. We really haven't invented anything new. This is just another way of trading. So we've always known that political risk deserves a discount. It hasn't disappeared.
So in your opinion, okay, yes, there's something to the flows of money coming out of the States, but this is more an artifact of branding and marketing by the salesmen for fund management groups.
I do believe so. I think this is more to do with artifact and yes, the flow of money helps the growth. Of course, that means that's you got to, and there is a real growth story that is not unchanged. But even with growth of 7-8%, do remember China is ruled by the People's Communist Party. Whether you like them or not, that's who they're ruled by. The structure, the law which you play with, is dictated by that party. Now, We like emerging markets. We like investing in emerging markets. We've been investing in emerging markets for 25 years. But we never bought the idea that somehow the game has changed. We understand that there is political risk. And as I say, recent events show in one country it can happen, and we think it can happen in others. And by the way, look at Argentina as well. I mean, and Turkey. I mean, they're popping up now.
Okay, Saka, thank you very much indeed. I think the takeaway from that fascinating conversation is that we needn't necessarily blame Bernanke for everything, that the fund management industry does have a lot of questions to answer itself over a lot of the valuation anomalies we see around the world. And yes, emerging markets might be a good investment, but you do need to get a discount before you buy them.